I just finished my video on Meta. I talked about second quarter earnings and did my usual kind of going through the balance sheet, income statement, statement of cash flows. And now I've been reading reviews. So I don't know if I'll continue this, but what I do is I read employee reviews on Glassdoor. So I go to Glassdoor.com, because anybody can like write a review about a company they work for. And if you haven't used Glassdoor, it's a good place to go to, because if you have an interview at a company, you can actually go to Glassdoor and then people talk about, come on, what the hell? I thought I had an account with Glassdoor. Now I have to log in again. It's so annoying. Let me just make title. Let me just make something up to get to move forward. Location, New York City. Employer, Apple. You don't have to work at a company either. You can just write a review of any company. Oh, come on. So annoying. Okay, I'm ready to join. Okay, explore community. Okay. So the cool thing about Nextdoor is, say you have an interview at Ford. You can see what people said about Ford who work there. There's even people who had interviews at a company. Okay, let's just do Apple. So say you're having interviewed at Apple, you can see what people wrote, because people write like what the interview questions were. So it gives you like a heads up. You can see salaries. If you're applying for a position, you can look up that position at that company. If it's a real small company, it might not be on Glassdoor, but if it's a bigger company, it'll have a lot of information. And you can see what employees said, because if you get hired at a company and all the employees hate it, you're probably going to end up hating it too. So maybe you don't want to join that company. I mean, you need a job. So most people don't turn down jobs if they're offered one. But so anyway, so I go to Glassdoor, I read reviews about the company, employee reviews. So I did Meta, the video on Meta. So I read reviews, what employees at Meta say about it. It's a little information. It probably won't give you enough info to buy or sell a stock, but it's good to know what employees think. So how did Meta do? Leave a comment. I can maybe do a DCF on a different type of company, or we can look up any company, do a DCF or look up their financials. So Meta crushed it again, great earnings, and they're the only, most I think the Magnificent Seven all did pretty well. I think they all pretty much beat revenue. Some beat earnings. I know Meta beat earnings, but everything went down except Meta. Meta went up. But even though these big companies, NVIDIA, reporting good numbers still, the stock went down. So that's a good sign if you're a Meta holder. But NVIDIA did release earnings. So I don't remember reading their looking at their financials. That's odd, because I was really intrigued the last time they reported. Okay, so 10Q, their 2025 10Q. Well, I don't think they reported yet, right? Because NVIDIA is like an off quarter. They don't report. Yeah, so they didn't. The last time they released it was April 30th, April 28th, because they have a weird calendar year. Their their fiscal year end is, January 31st. That's their fiscal year end. So, they completed 2024 because their year ended January 31st, 2024. That was their fiscal year end. So they're accounting. They're in the 2025 accounting year. So when they release, so they already released earnings on April 28th. That was a few weeks ago. That was their first quarter of 2025. You could see here 2025. They already have 2025 started, even though we're not even halfway through. Well, now we are halfway through 2024. Kind of makes things a little confusing, but it's always based on the year when the year finishes up. So they're going to finish their fiscal year January 31st, 2025. So that's why they're currently in 2025, to make things a little more confusing. I guess why don't every company just be like Meta and report on a calendar year? It would make things a lot easier. Can you hear me? Because Kevin, what's up? Okay, I could hear me. I always get paranoid, like when no one comments. So do we keep buying Meta? And I'm not like, I own Meta, a lot of Meta, probably a little too much Meta. So obviously I want the stock to go up, but I would not pump the stock. I do. I wouldn't say it's undervalued now. I would say it's valued at a good level. It's just really hard to predict the future. And the AI, this whole AI growth thing, it seems like it's going to be pretty big. And who's going to be the beneficiary of it? I think Meta will be a beneficiary of it big time. Bad news about Intel this week, Scott. People were saying, "Oh, what a terrible call on you." I don't own Intel, and I don't plan on buying Intel. I actually sold my Intel like a year ago. So I don't really care if it goes up or down. But I did say, I can't, obviously predict short-term price movements. These things got out of order. I'm glad I saw this. I gotta. Let me reorganize it. Yeah, I'm gonna go through this. I want to just show you. RR. Did anybody lose on Intel? I'm kind of like, I always think like when I see Nvidia going up like 1,000,000%, I was like, if I could have had the balls in like 2021 to put 100K into Nvidia, I'd have like, like $2 million, $3 million. God, if I wish I would have put like, it's so easy after the fact to say that, but I'm like, do I have the balls to put 100K into Intel? Imagine it turns into like it goes up like 20x. Imagine hitting like 5-10 million on a stock. Like that would just be so sweet. And I'm not sure if I would retire on that. But if I hit like 10 million on a stock, I definitely do something big. Because I always feel like, even I guess people think I'm doing well. I always feel like I don't want to waste money on something. I can't justify a car. Even though like, who wouldn't want to like a brand new like Tesla or a brand new BMW, something like that? It'd be cool, right? And just not worry about money. It's kind of like going out to dinner with your spouse or your boyfriend or girlfriend and dropping like $1,000 on dinner, which I don't think I've ever done. But if there was a really high-end restaurant and like it was like an experience, I would probably do that. Drop $1,000 on dinner. Not often, but I could handle that. It wouldn't be the end of the world. I guess that's equivalent of buying like $100,000 car, dropping $1,000 on dinner. I probably wouldn't do either. But if I hit like a massive something in the market, yeah, I would. It's just so hard. You always think, if I had this money, what would I do? I don't know. What would you do? So, I mean, I guess if I would have said they were overvalued, no one, people would have been like, oh, okay, it was a good call. But I have them losing $12 billion of free cash flow this year, losing $7 billion next year, losing $3 billion in 2026. So I have them finally become profitable again in 2027. And assuming that happens, I have them priced at 37. So how would I know what they're going to do a week after I make the video? If a year from now they hit that 37, no one's going to come back to the video and say, oh, you were right. That was a good call. It's just that they just try to knock you. And I don't really care. They definitely needed to cut the dividend. It was a good cut. They're like trading at like a 20-year low. So, I mean, could you imagine like, forget about options, right? I would have been, that's nuts if you would have. But like, so NVIDIA's at 100 now, even though it was like 130 recently. And this is all stock split adjusted, of course. So it's just hard to, say you put, it's 100. So in 2019, which wasn't a long time ago, 5 years ago. So if you drop 100K into NVIDIA in 2019, it went from 5 to 100. So you would have 2 million. And you don't have to worry about options. You don't have to worry about timing it. You would even had more, like, 2.6 million a few months ago. But you're at 2 million. I always think, like, what dollar amount do you need to, like, kind of like say, I'm set? I think 10 million. I don't know if I would retire, but I would say, like, I think I'm set. I think I'm good. I can quit my job and then maybe next year get a job if I'm bored or start my own business. But I think 10 million, because I said to my wife, like, if we can have $100,000 a year to spend every year, we could spend $100,000. I'm not saying we make $100,000 out of jobs, but I'm saying we have $100,000. The most generous guy, we need $100,000 of cash every year that we can spend, even though we don't spend that much a year. But I just want to have that available. So I'm like 47 now. So I'm like, if we live 40 years, if I live another 40 years, I need to have $100,000 in cash every year because things are going to go up in price. So that's 4 million. So I need to have $4 million of just cash. Because right now I'm not spending 100K. I was probably spending close to 50K a year. And I have my house paid off too. That's how expensive California is. But if I didn't work, I would have to pay medical. That's almost like $2,000 a month for both of us. Yeah, Khaled. Yeah, I know it's you. How are you doing? Can you please do DCF on my microcaps ticker GMM? GMM extremely undervalued. It is highly profitable on a GAAP basis with excellent net margins, growing revenue. Yet it's a penny stock. Let's find out why it's a penny stock. And yeah, leave a comment. I appreciate any donation, but even if you don't donate, I might still do the video, assuming we don't have that many. I did notice that you spelled gap with 1A. I'm glad you corrected it. Not that I care, but GMM. Khaled is the most generous. I think Khaled, if you sum up all my donations, I think Khaled is about half, maybe more. But okay, GMM, very generous. I appreciate that. Is it Global Mofi Metaverse? Global Mofi Metaverse. 95 cents, 27 million. It's a small market cap. We'll do the DCF, and then we'll look at the financials a little deeper. Okay, this makes it hard. They have negative free cash flow, and it's projected to get a lot worse as time goes on. So we have to do more of a back of the envelope DCF, if you will. Let's look at their good revenue growth. They came out of the closet. 34 million. Okay. Oh, come on. Okay, 34 million. And they're growing pretty significantly each year. I gotta revamp my DCF, so I have the ability to go out like 7-8 years. Because sometimes I do a video like I did for Meta, and the DCF I usually do 4 years on my main DCF. I calculate 4 years of free cash flows, then the terminal value. But it would have been nice to go out 7 years, because the terminal value is assuming you're at like a stable point, and you're growing at usually like 1 to 3% a year after in perpetuity, because you can't grow more than inflation. But I think Meta, they're going to see significant growth for at least 5, 6, 7 years, if not more, because they're not like an AT&T where they're kind of flatlining. They're still growing at a really tremendous rate. Okay. So a negative 100 million, because that's what it says. Well, no, it's negative 9 million. Okay. Let's do negative 10 million, negative 20 million. How did it? Okay. Those numbers are incorrect. Check out Yahoo Finance and their most recent financials. They have highly profitable free cash flow. Okay. Thanks for letting me know. Let me look at. I'm going to go straight to their financials, but okay, yeah, 27 million of revenue. They have positive net income in terms of free cash flow. No, it looks the same. It's negative 1.4 million. It's negative 9 million. So there's no future performance because there's not many analysts following this stock. So the way you get the future projections for a company are from analysts. But analysts, they're not gods, so we can calculate it. That's what I do for a lot of videos too. I just calculate the future. Yeah, so they have negative. I'm going to keep them at So I'm going to keep. They have negative 9 million of free cash flow in the trailing 12 months. No, negative 1.4 million. Let me. Can they have negative cash flow if their net margins are so high? Yeah, you definitely could. Like they do have positive $7 million of profit, but that's not cash. If net income and cash flows are different. We could look at a statement of cash flows and find out why. Oftentimes it's stock-based compensation. I'm just going to continue on this trend. Well, I'll do the negative 1 million. What the hell? Okay, I'll do the exact cash flow, negative 1.4 million. So I'll give them negative 1.4 million. And I'm going to assume it gets worse. It doubles to negative 2.8 million. But then the way I always do it is that I'm growing their revenue. Let me see. So revenue of 27 million. And last year I was 17. $17.27. So even more. It's okay. It grew 59% year over year. So I'm going to grow at 59% for the next 2 years. And then I'm assuming they convert 20% of their revenue to free cash flow, because tech companies have higher margins than like a manufacturing company or a grocery store. So I think this is. Let me raise the whack, so I'm at $4. They're trading at $1. This is assuming they do generate positive free cash flow. Yeah, Tellurian is getting bought out by Woodside. Wait, WDC is Western Digital? I thought it was Woodside Energy. What's WDC? Oh, WDS. You wrote WDC. That's fine. Oh, you correct yourself. Yeah. That's a good thing. We should talk about that. Actually, I should do a video on Tellurian. Okay, let's just finish up on GMM, because the numbers are very they're so small, so it is hard to just look at the financials for a company like this. If we were looking at a behemoth company that's been around 50 years, that has stable revenue, cash flows, yeah, you could look at the numbers. Alex, what's up? Thanks for watching the PayPal video. Because if your friend had a small business and he said, I've had it for 20 years, and the past 10 years I had 100K in profit. The past 10 years, I had to grow. Say he's a landscaper. I had to grow the business. Now it's been stable for 10 years, 100,000 a year. It's a pretty easy company to value, right? They're consistent, and then you have an idea of what you're going to earn. But if your other friend said, and he's a landscaper, it's a common thing. People need landscaping. It's a business. You don't have to really convince people. Either they want it or they don't want it. But your other friend, he's like, I have an AI app where I'm doing whatever. I built this app using AI technology, and he's like, I've been in business 5 years, and I'm negative 10K a year. I lose 10K a year because revenue is pretty small. So that's a lot harder to value, right? Like you have to do a little more kind of due diligence and like look at the app, see how good it is, see if he has any customers, see if the customers are continuing on. Do you think PetMed Express? No, I don't know. I kind of gave up on that. We could look at it again. Leah Pekka. It's a cool name. It's late here in Amsterdam. Okay, you going to bed? Okay, that's a shame. But next time you come on, we'll look at the financials for that company you were saying. But yeah, I know it is probably pretty late there because they're like 8 hours ahead of us. Can you look at Job, which is staffing company? I did look at that once, Job. Yeah, I don't know if I did a video on Job, but do you think Lending Club? What's up, Quags? Okay, so if somebody donates, I kind of have to do the video. I thought you were going to bed. But if you don't donate, I do still want to look at it because I'm always curious. There's always a risk reward kind of thing with investing. 1064 1.19. How did you get so good at investing in DCF modeling? I was going to bed, but your work is so good. That's too nice. When I go to Amsterdam, we got to meet up. I still want to go. There's a few people I know there. I mean, I got good because of the channel, really. I mean, I don't think I was. I understood it enough to talk about it, but I didn't really have a deep knowledge until I started doing videos, and just repetition kind of thing. That's how you get good at anything. The more times you do it, especially in a smaller time frame. It's kind of like shooting 1,000 free throws, right? If you shoot 1,000 free throws every year, you'll probably get better at basketball. But if you do it every week, you're going to improve much faster. Lending Club. Yeah, no, that's nice. It's a tough gig, like, cause it's so hard to get a return. I've kind of given up on trying to make money on the YouTube. I'm just do it for fun, more of a hobby. Negative 321,434. So at least you have some kind of hard numbers to go with. Like Lending Club has been around a while, so it's not as much guesswork as if you were doing like a startup. They look pretty good. They look pretty undervalued. I'm at $30. They're trading at 1064. So if you're a long-term trader, the DCF is helpful, and but if you're a a day trader or a swing trader, the DCF isn't that important, because DCF is more like what should the stock be worth, and you have years to wait to get to that point. For short-term trading, it doesn't really matter so much what the stock is worth. It just matters kind of like the price. Like, for instance, your Lending Club and Khaled, the fees, I have it valued at 30. It's trading at 11. So that gives you enough information to probably maybe buy it, right? And if it doesn't go up, if it goes even down, as long as the numbers come close to what the analyst projections were, the stock will go up. It just might take a year or two. But if you're a swing trader, you want to look at price and just not focus on like fundamentals as much, because fundamentals aren't that important. So if you're a short-term swing trader, something you would maybe look at is where the stock was historically. And just because the stock was trading at, well, it did a reverse split, so this looks a little deceiving. It appears that it IPO'd for 126, and we know it didn't, because it did a 1-for-5 reverse stock split. So that means it IPO'd for 25. But even taking that into account, it peaked at 125 as soon as it started trading. Now it's down to $10, so it's down like 90+%. But post stock split, it got up to 45. So when it split, it was 13. So that means it was like equals. Wait, it was 13? Oh, that's okay. So when it split, it was 13. So that means it was. That means it was trading at $2.60 in July 2019. $2.60. So they did a 1-for-5 reverse stock split to bring the price up to 15, and then immediately came down to 5, which would have been a great time to pick it up in July 2020. I don't think COVID helped. They did the split right before COVID. So if bottomed out at 5, and then it ran up and 9x to 45. But generally, this is what happens when a stock goes up real fast. It's going to come down. I don't know if it'll come down to these levels. But if it's a really good stock, it may come down. Like, say it has to come down a little, because it just doesn't make sense to have a run up like this, unless they're pumping out like amazing growth like Nvidia is doing right now. But it comes down. If it's a great stock, it would probably come back up. Maybe not at this high level, but it'll probably, you get people want to take in their profits, then it'll come back up, and over time it maybe eclipse that. But if it's not a good stock, it never should have been this high. This was just due to irrational market buying. It got up real high, and then is it just a big sell-off? and it didn't rebound because it's not that strong of a stock. But if you're if you're a day trader, you can try to identify these types of dips and take advantage of it. But I don't think anybody really makes money day trading. The only people who make money day trading are lying about making money, or they get real lucky. Yeah, Anderson. Intel is something you definitely want to look at. I think tech will be the main sector to sell off, and more selling on Monday. Jupiter, thanks for being a member for so long. I think you're one of the longest tenured members. So Lending Club looks pretty good. They have negative free cash flow. Did they release second quarter earnings? Oh, they did. So revenue has been coming down. It's actually up a little from first quarter to second quarter, but it's been coming down for the past several quarters. But I'm curious how they did cash flow wise. Yeah, they're still burning a lot of cash. So Intel, is this a time to get into Intel? We all want to it's hard to make like $10 million in the market unless you do an options trade, which is like it's not hitting the lottery, but it's kind of like almost hitting the lottery, like being able to time a stock and get all that upside in a short time frame. And even $100,000 is kind of a lot of money to drop into a stock. Like I was saying earlier, if we put 100K into NVIDIA in 2019, it would be like 2.5 million. So unless you have $1 million to play with, it's hard to make a massive amount of money in the stock market. It's just little by little. You should be happy probably to know I am only subscribing monthly to your channel out of all YouTube channels. That means a lot. Yeah, I appreciate that. And it's not about the money thing, because it's just the sentiment, and it does mean more when people do pay. It kind of validates me. But like I would never sell a course. I just think that's ridiculous, and I probably could maybe make money on that, but I just think you shouldn't buy information from someone, because if anybody is good enough, if anybody has really, really good content where they can actually make you money in the market and they sell information to you, it doesn't, because why would they do that? Like, I would be a multi-billionaire if I have that much stock knowledge that I could pretty much guarantee results. I would have billions, but hardly anybody, there's like 5 people in the world, like Warren Buffett being one of them, that kind of could guarantee results year after year. And he misses years too. Warren Buffett is selling more Berkshire app. Yeah, he's selling a lot of Apple. Didn't they release their second quarter earnings today? I made more money in the market by buying companies that were already established. Like, people always looking for like the next Apple or the next Amazon. But the thing is, even if you drop 10K into like, even if I told you a stock that I mean, of course, I can't guarantee anything, but even if I said it's pretty much guaranteed this stock will will 1,000x. But you have to wait 25 years. Like, it's just, there's no way people could wait that long. I wish I could. You only have one life, you know? I mean, you can't spend it like, I guess if it was guaranteed, of course, you would drop a ton of money and wait 25 years. But how do you know it's guaranteed? A lot of times I think, oh, this is a lock. And then after 5-6 years, I just lose 30% of my money. Like, it's never gets to a point where I actually make a lot of money. It's stock split adjusted the price, so it was never 7.5 cents. But when you adjust for the stock splits, I'm just going to show you like a scenario, like how, like, even if I gave you the information, I mean, no one's going to sit on a stock for 2-3 decades. It's just so hard to do. Even looking at a chart like this at such a high level, it's hard to do. But day in and day out, seeing the stock, all those people skip the fact that they would have been unlikely to keep holding. Yeah, it's just so. So if I said, like, in 97, I said this company is going to be big. This guy, Jeff Bezos, he knows what he's doing. Even if I knew that, I'm still in college. I mean, I guess I could put 10,000, but that would be like all my bar mitzvah money. I did have 10,000 when I graduated college. I worked 2 jobs in college. In my junior and senior year, I worked two jobs, like a supermarket. And I saved $10,000 those 2 years while I was in college. And the reason I saved all that money is so I can, like, when I graduated, like, my goal was I'm going to buy a nice suit. It was only like $300. It wasn't like I bought a watch for $500, which was more than a suit. And I wanted to buy a few things to start interviewing, but I got a job before I can buy everything. But I did get a suit and watch. There's other things I was going to buy. Come Come on. So if I convinced you to buy Amazon in 97, I was like, it's going to be big. And a lot of people, $10,000, even now working and having savings, it's not like, oh, it's 10,000, no big deal. I have dropped 10, 20, 30,000 stocks. Sometimes I've lost. So in 2 years after the $10,000 investment, it's $600K, which is crazy, right? And you probably you're like, oh, you're a genius. How did you know? How did you know about this? It's $600K. That's a massive jump, right? Then the following year, it's down to $48K. And you don't love me as much anymore because you're just like, oh my God, I had like $600,000. I could have bought a house. And this is in the 90s. So it went a lot further. Today, it's like a down payment on a house. Now, I don't really care about dividend. So if you were, because when you hit 600K, you're like, oh my God, I'm going to have like $50 million. Because if you put 10,000 to Microsoft, it's kind of like that kind of thing. And you're like, oh God, I was doing so well. And you got to assume you're seeing this every day. It's not like you can just fast forward like we are now. And then finally, after 7 years, you dropped most of your money is burned away. You're down to 48,000, and actually should have went bankrupt, Amazon, in the .com crash, because almost every .com went bankrupt. But I think Microsoft bought a big piece of them, like 20% of the company, and that kind of helped them stay afloat. But you're probably saying in your, oh, if I could just get back up there to where it was, because anybody would be happy if they put $10,000 into a stock, and then 3 years later it's almost $50,000. Anybody would be happy. The only reason you'd be unhappy is if at one point it was 600,000 and then went down to 48,000. So let's say in 2007 it gets back up to 586,000. If you're one of the very rare people, I'm gonna if I 100,000 people, I told them about Amazon and they actually listened to me, which is probably unlikely, but say 100,000 people bought 10,000 Amazon in 97. Okay. I'd say maybe there'll be 1,000 of those people who are still holding by 99. So 2 years later, I'd say probably, what do you think? Barbacoa. Okay. Good flight. Safe flight. Because within those 2 year time frames, you're seeing it go from like 10,000 up to 600,000. So there's a lot of opportunities for you to sell. So very few people would actually hold up to 99. And then there were some people, like I'm saying, say 1,000 people, 1% are still holding. How many people would still be holding at 2,000, when it hits 36 cents in the year 2000? Maybe half of those, because those 1,000 people are probably a little more long-term thinking than these 100,000 people. So maybe half. And a lot of people would sell even at 36 cents. They're like, it's going to go to zero. They keep hearing the news. Amazon's going bankrupt. They don't have enough cash. They can't sustain the .com thing. And so most people would have sold. But how many would have held on by 2007? Say maybe 250, half of those would have been around. I think this is the hardest part. Because if a stock goes down a lot, it's painful. But you always think in the back of your mind, if I could just get back to where I was, I'm going to sell. I don't want to deal with this. I'd say a majority of people would have sold in 2007. Probably I would have too, especially, I'm only a few years out of college. So how many people of those 250 would still be around by 2011? Maybe like 5. And if they were, they would have went up to 1.3 million. And probably like maybe 2 will be around. If they waited 2015, it'd be 4 million, 13 million, 22 million. That's only $10,000 you invested. You're already at 22 million. But even if you held on, you're like, how greedy can you get? I know you could sell part of it. Well, Amazon was almost a lock to go bankrupt in 2001. The stock was almost $5. It's just split adjusted. So it wasn't 5. It was probably like $80 or something. And then the stock came down a lot and everybody's going bankrupt. All the dot-coms were going out of business. They just got lucky. Microsoft bailed them out and some other big tech firms. So if 2020, you were at 22 million, which was the peak at that point. And then COVID, and then it came down to 11.7 million, which is still a lot. But now it's at its peak. It's at 27 million. That $10,000. So who would have held for 27 years? That's a thing. Like, yeah, I think Microsoft. Okay. Who bailed out? I'm not saying they bailed them out, but they just invested a lot in the company to keep them alive. I thought it was okay. Okay. During the dot-com booms of the 90s, the company posted larger and larger losses because they were losing a ton of money, Amazon. I mean, it was like 15 years of losses. So it wasn't like they were making, they were struggling. But they had a vision. The growth was there. Revenue was growing. But the problem is when something catastrophic happens, like COVID or the dot-com or any crash, companies that are losing a lot of money tend to go bankrupt. Even if they have a vision for the future, which every company has a vision for the future, they tend to go bankrupt because they just can't sustain financed by investor funds pouring in, but the mood of the market abruptly in 2000 catching many companies off guard. So how did Amazon survive the bust? Amazon got lucky by raising a ton of money right before the market crashed, giving the company the cushion it needed. It's a good reminder. Early in 2000, Warren Jensen, the conservative new CFO from Delta, so Morgan Stanley bought $670 in convertible bonds. Amazon was forced to offer a more generous 7% interest rate. So they were paying 7% on those bonds, which was a lot. when the rates were so low. That's what I mean by bailing them out. Like you had a lot of these big companies, like Morgan Stanley. I thought it was Microsoft. Okay. Maybe it was Apple. Oh, it was, okay. It was Microsoft. Okay. Okay. What the hell? Why did Microsoft save Apple in 1997 instead of buying it out or letting them go bankrupt? Because they needed. Microsoft has always been in business with Apple selling lots of Office. But that's saving Apple. Maybe I'm thinking Microsoft saved Apple, bailed out Apple, not Amazon. Okay, defense contractors seem to be a safe bet long term. So yeah, so that's what I'm saying. Like even if I told you a stock that you can make a ton of money on, not many people would do that. So I did my meta video just now. I was going to do Coinbase tomorrow. That seems to be a popular one. So the only thing about Lending Club that I don't like is that there's a lot of dependence on like interest rates, things like that. So it's a little more tricky to invest in. Like when you invest in like a company like a Microsoft or Apple or like a manufacturing company, you kind of know what they do. And of course, interest rates affect everyone. But if you're selling a product or service, you just got to sell more of that product or service. So who bailed out Apple? Well, Microsoft to joust in the Microsoft's bailout is credited with saving Apple from demise. So why would they save their competitor, the biggest competitor? Competition is good, actually. You want competitors. There are many reasons Microsoft decided to invest in Apple in 1997. Maintaining competition in the industry. Because if you don't have that competition, you're not what is that? Necessity is the mother of invention. You ever hear that term? Necessity is the mother of invention. So unless there's a purpose, you need something. That's why a lot of things get invented, because there's like a need for it. So that's why competition is good, along with other things. But when you're kind of forced, when your competitor starts making a better product, then you have to really think and figure out how to make even better than them. Apple was still seen as important counterbalance. Having Apple fail would allow Microsoft to monopolize the market. They did capitalize when Apple recovered. They invested $150 million, which was small for Apple, but that turned into a ton of money. Microsoft converted its Apple into common stock. However, by 2003, Microsoft started to sell all of its Apple shares, generating $550 million from the sale. So they didn't make that much profit. They invested $150 and they sold that for $550. Yeah, I should do a Tellurian. Speaking of American, are you a buyer at these levels? So Intel. So what stock are we looking at? Intel. So Meta, they had their second best quarter ever, $39 billion of revenue. The only quarter that was better was $40 billion in the fourth quarter of 2023. Their revenue is growing in each segment. They're growing in the US, but their growth in Asia is so much stronger. They're growing like 25% annually in Asia. They're really growing a lot in Asia. Europe and America and the US, they're growing just minimally, like 10%, which is good. But like in America, we don't think of Facebook as this like new popular thing. We think of Facebook as kind of like older generation people in the 30s and 40s and 50s are using it. If you're in your teens or 20s, you're probably using Snap or maybe Instagram, not Facebook. But Asia, a lot of Asian countries are kind of like where we were like 15 years ago. Like Facebook is kind of like popular there. It's like a trend. A lot of people are using it, including young people. But what's even better is that even though their revenue went up, when you look at the second quarter of 2023, it went from 32 billion to 39 billion. So really good growth, like 39, 32. It went from 39 to 32. So it went 22%. So their growth from Q2 23 to Q2 24 is 22%. 22% is pretty significant when you're at 32 billion. But their expenses have come down so much because they did all those layoffs. And so they're so much more profitable than they were. The only thing is, in reality of labs, they have a operating loss of 4.5 billion. So they had an operating gain in the family of apps, which is Facebook, Instagram, WhatsApp. So 19 billion of profit, but they're still losing a lot in the Reality Labs, because Reality Labs revenue is 350 million and expenses are like 5 billion. So they're still burning a lot. So hopefully that leads to something, because Reality Labs hasn't been growing much. But their general and administrative expenses are 9% of their revenue. It was double digits. Marketing and sales is down to 7% of revenue. It was double digits. And R&D and cost of revenue are down also. Not as much, but they're down as a percent of revenue. So in terms of net income, the second best. Fourth quarter of 23 was their best for net income. EPS also second best. They're spending a ton in CapEx. Who isn't on AI? The Fab 7 are spending enormous amounts in CapEx. Year to date, they spent 15 billion. for the second quarter alone, $8.5 billion in capex. But their daily active users, this is to all their platforms. Like Meta has like 3 billion users. I mean, Facebook has 3 billion users. Instagram has like 2 billion users, but a lot of those people use both. So there's a lot of crossover. So when you look at the individual users across all their apps, it's 3.3 billion. So about half the world, a little less than half the world uses at least one of their apps. So these are the most popular platforms, social media platforms, in terms of number of users. So Facebook has 3 billion users. YouTube is second most popular. And then WhatsApp and Instagram are third and fourth, also owned by Meta. So Meta owns Facebook, WhatsApp, Instagram, Messenger. What did someone say? I wonder how much revenue Meta makes from WhatsApp. $790 billion. In 2021, WhatsApp generated $800 billion in revenue. In 2023, $382 million. Goes down to $382 million. So Meta has 3 of the 4 most popular social media platforms. So that's why it's so expensive, the stock. Average revenue per person, that's also a lot higher than last year. They're just spending so much on capex, and they're losing so much in their. They only have 2 divisions. They have the advertising division, and then Reality Labs, and they're just losing so much in Reality Labs. But could you imagine when they start profiting in Reality Labs? It's gonna double. I just wish Intel, it's just so, I think it's a good time, but I just want to get like options. I want to like invest 10,000 and make like 10 million, like Roaring Kitty did. He did 50,000 and got 50 million. It's just so hard to do, right? So $21. So if you bought in 1997 Intel, you put 10,000 into Intel in 1997, you would still have $10,000. I mean, even worse, if you put 10,000 in 2000, you'd be down like 60%. It's still a lot higher than IPO, but it's but it was 21. It was 21 a lot. It just happened to be around 20s in 97. but it did hit 20s. And so it's at like 11-year low. It hasn't been this low since 2013. If it gets down to 10, it'll be at like a 16-year low. The thing with Intel is that they're not going to be profitable. Even the company says it. They're not going to be profitable for at least 3-4 years because they have because when you manufacture products, because they're trying to go head on with Taiwan Semiconductor in the foundry business. It takes time. It's not like I mean, most things take time, right? But if you're really good at like NVIDIA was able to grow really, really fast, right? Really, really quickly. And like literally like just in 2022, they weren't doing that great. It just in the past 2 years, their growth, went up a ton. Because they just design the semiconductor chips. They just have a really good quality chip. When you manufacture, it takes just years to like build a facility and then make enough products to where you're able to just make cover the cost you spent just to build a factory, and then it takes another year or so to get a return on that investment. Here's the future. So I mean, even the company's saying they're going to be losing cash for a few years. Definitely negative cash flow this year and next year. The company, there's no question about that. Probably even into 2026. Although possibly if they grow enough and things work out perfectly, they might be cash flow positive in 26. But earliest to start seeing a return is 27 or 28. But if they do, say they do, they do a really good job as a foundry manufacturing semiconductor chips, and they do take business from Taiwan Semiconductor, you can't wait until 2026, 2027 to invest in them, because the stock's going to go up a ton way before then if they're moving that direction. If you see their revenue start to grow a lot year after year, just like Amazon was losing so much cash flow for like nearly 20 years, from like the mid 90s to like 2010 or something. They were just losing a ton of cash year after year, but their revenue was growing so much. That's why their stock kept going up. So as long as Intel does something positive, doesn't have to be profits, it just could be revenue growth, and it's obvious they're going to get to a point when they're going to start making an amazing return. So the stock will go up a lot next year if they start growing their revenue significantly. But if they don't, if they keep losing customers, then it's just it may get to a really good point, but no one's going to buy the stock until they show some progress. But Intel doesn't have a Musk, Wang, or Zuckerberg running their company. Their CEO doesn't care. Yeah, I mean, I wouldn't say never, actually. I have clicked on ads on Facebook, but a lot of times if you don't use Facebook, then obviously you're not gonna. But a lot of times, when you advertise, it's not always about clicks, even though that's what you want. It's about impressions. So if you can like if you advertise on Facebook and you're getting a lot of impressions, it's going to lead to sales. It may not lead to sales directly off Facebook, but maybe they see you on Facebook 10 times, and then they see you on another website 10 times, and then they buy from you, that customer, or they go into your business and buy something. It's a lot. That's what advertisers do. They just need to have a ton of impressions. The past 2 days of data that more selling from markets. I mean, I would totally agree with the recession thing if companies weren't so profitable. Because generally a recession, like COVID was different. That wasn't because companies were losing money. That was because of this virus that shut everything down. But that rebounded real fast, right? And then in 2000 and 2001, the dot-com crash, companies just weren't making any money. They were losing a lot of money year after year. And then it was just a bubble that burst. So, I mean, there's always going to be a correction. Market comes down, but I just don't see a huge crash because these companies are they're making so much money. So you can justify the reason the stock goes up a lot. But we'll see, who knows? So you don't think Pat Gelsinger cares? He has no vision? I mean, he was with the company in when they were like the biggest semiconductor company in like the 90s and the 2000s. I think even in the 80s, he was there in the 80s when they were like the king of the personal computer. It was them, IBM, Microsoft were the reason for the PC boom. That's why in like the late 90s, early 2000s, everybody had to have a PC in their home. I mean, it was hard to find someone that didn't have a personal computer in their home because you just needed it. Adults needed it for work. Some adults worked at home in addition to working in the office. But it was a lot of people needed it. Kids wanted it so they can talk to friends on AOL chat rooms. And then, college students and some high school students needed it to do work, to write papers, things like that. So yeah, so is this the bottom? It seems like it, but I don't know. I sold last year my Intel. I remember I bought Intel I don't know when I bought it, but I bought it I can't remember when I bought it. I want to say around $40 in 2022, maybe mid 2022. And then I was down a good amount, 30-40%. I think I sold it at 30. So a 30% loss. And I remember it got up to 50. So I would have made money if I held on. But, I sold it and bought Meta with it and tripled my money. So, I mean, better off. I remember somebody commented, are you upset? Because around the time they were trading close to 50, they're like, are you upset you sold your Intel? Of course, you can't really, I'd be upset if I put 10,000 into a company and then that would have turned into $1 million if I held it. That would probably make me upset. But I wasn't upset that I sold at a 30% loss instead of selling for 50% gain. Because I used that money, I bought tripled my money with Meta. So I'd rather triple my money than get like a 50% gain. But now I saved myself money. I would have lost if I kept holding. I wouldn't say the factory's only gonna do well if there's a pandemic, because there's a huge demand for semiconductor chips. I think it's pretty obvious. The amount of money just the Mag 7 are spending on CapEx, a lot of it is for AI, is like what, $200 billion this year. Like Meta is spending like 30 billion in CapEx this year. Google is like 50-60 billion in CapEx. Amazon's like 45 billion or 50 billion in CapEx. So like just those 7 companies, there's thousands of others, are spending $200 billion in CapEx. Probably half of that goes to AI. So you need someone to supply the semiconductor chips, because those are a big part of all this. Because when Tesla makes a car, those semiconductor chips are a really valuable part of the car. There's like literally like 200 semiconductor chips that go into an EV. There's a lot of other things. There's doors, there's steering wheels. So if you're a company that makes tires and there's a big vehicle boom, you're going to benefit from that. So I think the demand is there. Unfortunately, Taiwan Semiconductor has a stranglehold on the foundry business, because they do it for cheaper. So it's a lot cheaper to go to have Taiwan Semiconductor make the semiconductor chips. So like NVIDIA gives almost all their business to Taiwan Semiconductor. But if Intel can offer a similar product, even a better product than Taiwan, which would be amazing, at a decent price, they don't have to be cheaper. Because if you're NVIDIA, you're willing to pay more money to buy in America, because it's going to save you in shipping and time and the delay of delivering product. So you can pay 30-40% more and buy from Intel, but you can't, if Taiwan's, selling something for 100 and Intel selling something the same, manufacturing process for 300, you got to go to Taiwan. Even if you spend $50 in shipping, you still have to go to Taiwan because it's so much cheaper. It's not easy to manufacture semiconductor chips. It's like if there was a like unbelievable demand, like I was the EV example for tires, like say there was a huge boom. Everybody had to get an EV. So, like 75% of Americans had to replace their cars with an EV. So there's a huge demand for a lot of things. So I'm just going to pick an example: tires. There's 4 tires in each car. Every car has tires. So you may see more, manufacturers popping up that make tires because they want a piece of the action. Because even if there's a company that controls the tire market, they're gonna just be there's gonna be so much demand there. They may run out of product. There may be delays. So new companies pop up because anytime there's money to be made. But it's easy to make tires. I mean, I don't know how to manufacture tires, but it's not, if you know how to manufacture something already, it's not going to be that much of a stretch to make tires. But if you can manufacture things like tires, clothing, furniture, it's very easy relative to manufacturing semiconductor chips. So semiconductor chip manufacturing is very complex. Like you need like scientists. You need like it's not that straightforward. So it's not like you can just open a factory and just learn it just by knowing how to do other things. It's a really difficult process. But even if you could do that, even if you have the scientific background and you have $100 million, you still have to compete with Taiwan Semiconductor, which is not an easy task. So that's why it's just not, and it's expensive. I mean, obviously manufacturing anything is expensive, but I think it's a lot more expensive to manufacture semiconductor chips. There has to be a lot of controlled environments within your factory. Like you can't just start making things. You have to have like temperatures in a certain area. It's very kind of, I don't even know how to explain it, but I know it's not. So how to manufacture semiconductor chips. So you have wafer preparation, pattern transfer, doping, which deposition, etching, and packaging. Okay. By now you've heard of the word iPhone, but yeah, because like for a computer, the semiconductor chip is really the computer. That's how the computer runs. That's how it gets its speed, things like that. The box around it doesn't really do anything. It's just for eye appeal, right, and functionality. But semiconductor makes it work. Semiconductor unit sales reached 1.15 trillion. So they sold 1.15 trillion units, semiconductor units in 2021. Because like I said, if you make just one EV, I think about 200 semiconductor chips go into one EV. And then a lot of EVs get made. And then there's other things too. There's, there's power plants that use a ton of it. Computers use a lot of it. No, I do plan to watch it, but like, even if I watch it, I probably still won't absorb it. It's not like a straightforward thing. It's not like, kind of like when I tell you guys how to read financials, it's not like if I just say it once, then you can do it by yourself. It just takes a lot of like practice. The process begins with a silicon wafer. Wafers are sliced from a salami-shaped bar, 1 mm of 99.99% pure silicon. Okay, ingot. Yeah, ingot. I've heard that term. So the films of conducting, okay, thin films of conducting, isolating, or semiconducting materials, depending on the type of structure being made, are deposited on the wafer to enable the first layer to be printed on it. Okay, so that's a deposition part. As microchip structure strength, the process patterning the wafer becomes more complex. So that's what I was just kind of conveying, is the complexity is a big barrier. Because when you think of barrier to entry, like people use that term a lot. Like it's a high barrier to entry. Because competing with Amazon has a really low barrier to entry. It's very easy to sell things online. It takes me, I could do it in like 5 minutes, post something. It's right. Go to eBay or Amazon, but the difficulty is getting that visibility. It's too expensive to build a brand that's you can compete with Amazon. But it's like if you wanted to compete with Costco, it's the same thing. It's not as easy as listing something online, but it's pretty easy to sell food. You need money though to open a store, a grocery store. So you could compete with them on some level. To open a supermarket, that would take many millions of dollars. So that's a little higher barrier to entry than just a grocery store. But yeah, but what Amazon has is not really selling products online. That's not their bread. That's what they have, logistics. Like they built an amazing logistics operation, which is hard to do. Lithography is a crucial step in the chip making process because it determines just how small the transistors on a chip can be. The chip wafer is inserted into lithography. So lithography, the chip has to be exposed to deep ultraviolet or extreme ultraviolet light. This light has a wavelength anywhere from 365 nanometers. So that's what I'm trying to say. Like, if you were handy and I asked you to build me a desk, you could probably do it if you're handy. But if I asked you to build me a semiconductor chip, you can't do it, even if you're handy. Even if you read about it online like we're doing here, you couldn't do it. Like if you're handy and you wanted to build a desk, you can watch a video on certain things and probably figure it out based on that. But it's just a different. It's too complex. You'd have to be, like I said, a doctor, a scientist, or have some type of knowledge. I mean, what do you think about? What do you think about the big selling pressure on the markets Thursday and Friday with bad data? Yeah, I mean, it's always going to move around, right? The market's always going to be up and down. But it's amazing. Meta is like the only company out of the Mag 7 that didn't really struggle with earnings. Their stock price went up. Everybody's went down. I think the Mag 7, most of them beat their revenue targets. Only a few beat earnings, but they all went down. But Meta went up. I mean, it was as low as 450, and then it hit almost 500 again. It did come down the other day on Friday, but so in the past month, that is a good indication if you own Meta. But I don't think I mean, there's always going to be dips, people taking in profits. You just have to wait it out. You just have to wait out the ups and downs. Because I think that as long as you don't buy at a terrible point. So yeah, in the past week, Meta's up 5%. And Apple's down 1%, and the other Mag 7s, Amazon's down 8%. I think who's this? So yeah, everything's down except Meta. Somehow it didn't really. S&P is down 2% in the past week. Yeah, I guess if you time something really poorly, it's gonna be a long road to get to some type of profit. So like NVIDIA, if you got it in March 2024, after that huge run up, it was 94. And then it came down to 76. So you were probably like, oh shit, terrible timing. But you just had to wait another month, and you're already up 50, 60%. Now it's come down though. So I think if you picked up a stock, NVIDIA, above 120, I don't know. I could see another year before it gets back up there, but because it's already run up so much. But yeah, people are going to take in their gains. But these companies are reporting really good earnings, really good results. So I don't see a long-term pullback with the market. I could see it like kind of going up and down for a few quarters. And I think, we're so dependent on the interest rate cuts. So as long as they cut in November, I think that'll be helpful. Hey man, the hair is looking good. Adam, thanks. I did I got the hair transplant. They cut like a big piece of skin in the back of my head, and they put like 1,000 hairs around my head, mostly in the crown part, but they also put some in the front. But it's coming a lot fuller, right? Thanks for noticing. Let's do another DCF. Like, it's good to, I'll be right back. Because after the fact, after a stock goes up a ton, you always look back and say, "Oh, it was kind of obvious that I should have bought it." But if in 3 years Intel goes from 90 billion to $1 trillion, I mean, $1 trillion is not that. There's a lot of companies over $1 trillion. There's 6, 7 companies over $1 trillion. It's not like it'd be a new record. But if they take a lot of market share from Taiwan, and they're actually starting to make semiconductors at a good, so we'd be like kicking yourself, even if they're not profitable in 3 years, even if their revenue say triples, but they're still losing cash, but they're getting closer. It could 10x, and then you'd be like, oh, it's so obvious. They had the factories built. We knew that what they were going to do. Semiconductors, so much demand, but I can't do it. I don't know if I can do it. Victor, what's up? Thanks. It's going to be a good stream tomorrow, me and Victor. Did you go to Turkey? No, I didn't go to Turkey. I went to San Francisco to do it. I know Turkey is a lot cheaper, and that's what they do. Where was that fake report in the government about NVIDIA also? What do you mean a fake report? So yeah. I kind of want to buy options. I'm too scared. Victor, you're killing it, right? You shorted. Well, you didn't short Intel, but you shorted NVIDIA. You shorted CrowdStrike. I was going to ask you, when NVIDIA went down, did you are you still holding it? I think that the fact that Meta is the only company that went up the past week, even though their earnings weren't that amazing. I mean, the earnings were really good though, but their guidance was a little soft. I guess it's a function of them. They went down a lot before earnings. I think that's why it went up the past week, because it came down so much before earnings were released. So am I missing any? NVIDIA. So in the past month, all the Mag 7s, well, these are 6 stocks. Who's the other? Is it Tesla? Are they Mag 7? SMCI, yeah. So in the past month, all Mag 7s went down. The worst was Amazon went down 16%. It was because they went down 10% right after the day following. Well, the night of releasing earnings. When they released earnings, and that night, it was down almost 15% after market. But I think that was Thursday, right? They released earnings, and then Friday, it opened up down 15%. But I think it ended up only down 7%. So yeah, Amazon did the worst. NVIDIA is down 13% in the past month. Apple's flat the past month. Actually, Apple was doing the worst for the year. Year to date, NVIDIA is up 120% year to date. Microsoft 10%. Amazon 10%. Meta 38%. Where's Apple? Apple's also 10%. So year to date, Apple was doing the worst. Right before they released earnings last week, they were like almost flat for the year. But now they're up 11% for the year, same as Microsoft. But in the past 3 months, Amazon is down. Apple and NVIDIA are both up about 27%. Yet, in the past 3 months, Apple has recovered a lot. Yeah, NVIDIA is down 25%. That's amazing. It looks like the high is July 10th. Okay, so from July 10th, NVIDIA is down 21%. That looks like that was NVIDIA's peak, July 10th. Meta is down 14%. I mean, the stocks that ran up the most are usually the ones that are going to go down the most, because at some point people have to take in their profits, and there's usually a sell-off and rebalancing. After the split, NVIDIA 10-for-1 was like, so since July 10th, so almost a month ago, so like 3.5 weeks ago, in 3.5 weeks, Apple's doing the best, down 5%. Well, let's see. Actually, the market is beating. All the Mag 7s are doing worse in the market, which is just hard to believe, right? Like, mathematically, how does that possibly happen? That the market is beating. It's the small caps have just crushed it. Small caps have done really well. So the Russell must be up like 15%. Is it the Russell 2000 or Russell 1000? Let's do the Russell 2000. The Russell 2000 must be up like 20%. It's 10%. Okay. Bonds went up. Yeah. Bonds are counter equity. So when when stocks go up, bonds go down. Well, interest rates mathematically move opposite bonds. So when interest rates go up, bonds go down, and vice versa. But usually bonds move. It's a lot softer than the stock market. So yeah, so the Russell, if you put money into the Russell, you'd be up 10% in the past month. But I mean, year to date, the Russell's only up 5%. It's just lately the Russell has done really well, because small caps have really struggled the whole year. I mean, before, like for the first half of the year, it's down. Small caps are probably down. Like, let me show you. So let's do 1/1 to 630. It's definitely down, small caps. Oh no, it's up 2%. So small caps are up 2%. for the first half of the year, the S&P is up 15%. NVIDIA is up the most of the Mag 7, but there's a pullback. I hope it. I don't know. I don't want it to pull back too much more because I own a lot of S&P 500 spiders. So if NVIDIA pulls back a lot, then that's going to go down. I just don't like stocks going up a lot that I don't own. I feel like I missed a boat. Yeah, definitely there's a correction. I mean, there's a lot of people profit taking. So the reason I would hold off on Intel. So Intel, they're down to what, 21 now? Yes, 21. And they're having a huge correction. Friday was their worst day, I think, in almost a history of the company. I think maybe one other day was worse. But the thing with Intel is that when you cut your dividend, because they remove the dividend, they cut it to zero. So most of the Intel ownership, right, is not by us. Like, you buy 100 shares, I buy 100 shares, your friend buys 500 shares. It's the funds, right? The index funds. So there's a lot of funds that own Intel, like a lot of dividend funds. So all those funds that own it because of the dividend, because a lot of people who are older, like 60 plus, they buy stocks like Intel because it pays a dividend. So they're going to probably sell too. A lot of people who buy it strictly for the dividend. But then there's a lot of funds that invest in, high dividend paying stocks. So you really can't be in those funds if they cut their dividend to zero. So all those will sell off there, which is going to push the price lower. So I think like 15 is probably a good resistance level. But there was a huge drop in the price, right? Due to a lot of factors. So is that taken to the market, those really shrewd analysts, investors? Is that reflective of where it should be based on the sell-off from the dividend type funds? Is 21 the right price point? Or is it going to be even more downside when those funds actually sell? Because I don't think all those funds actually sold. It takes time to sell. It's not like if you own if you have a fund with like $300 million in it and you have like 1 million shares of Intel, you can't just sell 1 million. You might sell it over time. Are you worried things will go much lower? Oh no, I'm not worried. I don't think. I mean, how much lower can it go? It's good. I mean, I don't I tell my wife, who always if our portfolio goes down, I'm like, this is what you need. You need a correction to get to that next high again. Like if you take a good stock, like Costco. Let me pick something different than what I've been doing. Like in Costco It didn't get up to 900, 880. So to hit that $1,000 point, when did they split last? They're due for a split. I mean, how high can it go? Yeah, I wish I got more Costco. I got 50,000 in Costco in my wife's account, and that's up like 150%. Because anytime people ask me, I was like, what stocks are you like, do you think are guaranteed? Would you say? So I was always like Costco and Meta. I should have just put more money into them. Why do I put into these crappy other stocks? So they never split. Costco. Well, they did in 2000. Okay. So the point was, in order to get to a new high, it really just can't keep going up forever. I mean, I guess it's possible to go up forever, but it can't, because there has to be, people have to take in their profits, because a lot of people invest to make money, and and they need the money, especially if you're in your 70s, 80s, or even if you're younger and you have bills, or you want to buy a home, or you want to buy a car. People don't usually invest for like 25 years. So if in 2021, I'm just trying to find when I bought my Costco. April 2021. At 355, which is exactly where I'm at now. So in April 2021. So when I got this stock for my wife, it was 350, 355. And then it would just surged to 600. So it had like 70% gain. But like I said, people have to take in their profits. When someone makes 70%, if people bought it when I bought it, they want to take in their money, either lock in profits and invest in something else more secure, like a bond, or just invest in something else, or use the money. Maybe, like I said, maybe they want to buy a home, and that was a purpose of investing. So there has to be some sell-off at some point. It just doesn't make sense to go up forever. So they finally, a big sell-off. So we were because anytime anytime a stock goes down, my wife was always the same thing. Why don't you just sell it? Like, it's so easy. Oh, just sell it. Like, as if I know. I'm like, so what do I do if I sell it? Just hold cash and never invest ever again? I mean, so we rode it all the way up to, I guess 550. So I got 50,000 for her. That's her. Well, Amazon's her biggest investment. This is the second biggest. So we wrote up to 77,000, and then there was a huge sell-off, and it probably came down to like. It's so hard to tell. Is that 350 or? Yeah, that nuts. It's 250. Okay. And that's 355. Wait, yeah, 355. So it looks like about 390. So we went from 50. 13 months later, we're up to 77,000. So we're up 55%. And then the month later, I guess, there's a big sell-off. I think they might have had earnings weren't as good as the market thought. I can't remember why it went down so much. Maybe it's just the whole market went down. Now we're down. We're only up 10%. So I don't tell her these moves every day. And then we run it back up to August 2022. To like 510. So we're still below our May, the peak we had in May. And then it just trades, so August 2022, and then it just trades sideways for August 2022, October 2023. For 16 months, it just trades sideways. So I mean, like if I told my wife, okay, you were at 77K for Costco, and now it's down to 55K, so pretty much all our gains were wiped out. She's always like, why don't you just sell it? I'm like, it's that easy that I know that's the peak, that's the market peak. But if I sold it, we wouldn't have had the opportunity to run up to like 870. What was that? That was like, plus we got the special dividend. So we got like, what was it, like $10 a share? Was it 10 or 5? The special dividend. I think it was 10, right? $15, even better, $15. And that's part of your equation. So you have to add that. So now we're, I held out another year. I traded sideways for 16 months. I held out. If it peaked, we were up 150% with the special dividend. Now it's down to 820. So about 7,000 have been wiped out. So she says, if I said, oh, we're up 149%. Now it came down like 7% or so. So we're down to 135%. She's like, oh no, she gets all upset. I'm like, but don't you want it to hit 1,000 at some point? You have to kind of like I don't know what the point of this. It's just you just got to hold out. You got to hold it. And this wasn't that painful of a hold because I was pretty much up off the rip. It wasn't like with Meta, I gotta. With Meta, that was a painful. I got it for $3.39 a share in January 2022. And I had 295 shares. But at one point, I think I didn't even realize it was that low, but I put 100,000 to Meta in January 2022. That's right after I sold my business. And then a year later, I'm down to 25,000. So that was I couldn't even look at my portfolio. But now I'm up like 60% on this investment because it's like, what is it now? Like 480? I don't know. So 40%. So you just got to hold through the ups and downs. I mean, unless they go to business, these companies, like it should go up over time. Although Intel, I don't know if it's going to go up, but yeah, a lot of those staple companies, like those kind of like safe investments, are doing really well. The small caps are doing really well. Although Costco, I would think it would. Costco is down. Why is Costco down? Maybe it's moving with the market. I wonder why Costco's down. So in the past month, Costco is down 4%. The S&P is down 3%, and the Russell is up 3.5%. How about Albertsons? Is that I would think supermarkets would be doing really well. Albertsons is up 0.5%. So what's dragging up the Russell? Defense? Oh, UTS. Yeah, you keep saying UTS. I keep forgetting about that. I have a habit of selling too soon. It's hard. That's the hardest part. I think that's the hardest part about investing is knowing when to buy and sell. And that's the only thing. If somebody asks me, like, is that something you do better than? I don't think I have because I think the market's pretty efficient. I don't think I have such a deep knowledge that I guarantee I could make more money than you in a market. I don't think so, because I don't know if I beat the S&P 500 historically, and you could just put an S&P 500. But the only thing I think I can do better than most is that I don't sell out of fear and buy out of fear. So that's the only thing. I not to say I don't get stressed and pissed off and think about selling. I just don't. I just wait it out. I mean, if I like it, like Intel, I sold because I just lost faith, and it turned out to be a good sell at this point. But if it's a good company, like if it's a Netflix or a Meta, I mean, of course, Intel is a good company too. We thought that. I mean, if you bought it for a reason, like you thought the company has a good product. If nothing changed except market perception, then I don't see a reason to sell it. Unless there's an opportunity, like a really good opportunity, like a stock you really want. Like when Netflix came down to a certain point, I sold out of something because I really wanted it. But usually I wouldn't sell something unless I lost faith or, like I said, something came up that's much better. So that's I'm at 18. It's trading at 16. It seems a little undervalued. Revenue is not expected to grow much. The debt looks pretty good. Not too bad. Dividend is pretty stable, 1.5%. So it's pretty good dividend, right? So they started trading in 2018. So they're 10%. So they're over 100 years old. So they've been around a while. That's 1921. I don't know why Utz? Like, did something happen, or you just like the product? Did they make a big acquisition? Okay, sales. They're not growing much, but they're not really even growing with inflation, but they're growing slightly, a little below inflation. EBITDA. Foundation brands. So they're losing in a foundation brands. Like their core product has been losing market share. I don't know what that means, power brands, but I guess it's retail sales. It seems like Americans are really, tightening their belts, so to speak. They're trying to spend less on everything, on food, on vacation. They may, they're probably spending less on like snacks. They just stick to eating at home instead of buying stuff while you're out. But I don't think there's much risk of, if we went into recession, I don't think there's much risk of this company struggling. If you sell like Ferraris, in a recession, that would struggle a lot. Or if you, or maybe like prime rib may, like more expensive cuts of meat may suffer in a recession. People may opt for chicken or whatever. So I think it's a pretty low cost product. It's I would say what's that term? In income goes up a lot or down a lot. I don't think sales adjust that much. People are generally going to buy this if they wanted to buy it. They wouldn't think twice. I'd want to understand their net leverage ratio. Well, they're paying down debt. That's good. GTX, is that the GTX? I can't think of that. Oh, Garrett Motion? I wasn't thinking of this. I was thinking of something else. I'd want to see their debt. Oh, here it is. Net debt and leverage ratio. This is terrible quality slides. So their debt over EBITDA. It's getting better. 3.8. It was over 5. They have $630 million term loan, a real estate loan. So net debt is debt minus cash. So 747 of debt. EBITDA. So it would take them 3.8 years to pay off their debt with their EBITDA. I have one share of WED, and I guess I sold the rest at a higher price. You got one share because of the reverse Morris trust, the reverse merger from AT&T. You were given a share, right? The only time I've seen a company use a reverse Morris trust acquisition was from AT&T and Warner Brothers. Wait, isn't it AT&T? Verizon, what she? AT&T, Warner Brothers. Verizon, I don't know. I don't really like telecom so much. It's a good dividend, but so to when AT&T wanted to spin off or sell Warner Brothers, they used a reverse Morris trust. I can't remember the exact specifics, but I talk about it in my video. It's just a way to save taxes by spinning off an entity. So it allowed AT&T to spin off Warner Brothers and sell the assets to Discovery to avoid taxes. It's a way to kind of circumvent taxes. So it starts with a parent company looking to divest itself to a third party. So AT&T divested. I don't know if anybody cares about this. I'm just trying to remember how this works. So AT&T wanted to kind of just get rid of Warner Brothers. They wanted to sell them off. It just wasn't profitable anymore. So they found Discovery, who was willing to take. So AT&T suggested to do this reverse Morris trust. So AT&T transfers the assets to a wholly owned subsidiary. So they transferred Warner Brothers to a new company, WBD. And then Discovery and this new entity, WBD, merged with Discovery. So after the RMT is formed, stockholders of the parent company own at least 50%. So that's the rub right there. I can't remember the breakdown. I think it was 60-40, right? Okay, it was 26.5%. Does anybody find this interesting? Only me. So when you spin off a company, you still technically own that company. It's just operating as a separate entity. So AT&T didn't actually sell Warner Brothers Discovery. They divested them. So the stockholders, the AT&T stockholders, after this new entity was created, the new entity being Warner Brothers and Discovery. So Warner Brothers and Discovery merged and created WBD, Warner Brothers Discovery. So this new entity, so WBD is 26.5% owned by Discovery shareholders and 73.5% owned by AT&T. So after the RMT was completed, if you owned AT&T before the spinoff, you would have kept your AT&T shares and then received WBD shares in addition to that. I can't remember the breakdown. Something like if you own 10 shares of AT&T, you'd receive, like 6 shares of WBD. Something like that. But if you own Discovery before the spinoff, the merger, then I think if you own Discovery, if you own 1 share, I think it was something like if you own 2 shares of Discovery, then you would own 1 share of WBD because you're receiving more. Because if you own 1 share of Discovery, you have to get diluted a little bit because you're receiving Warner Brother assets. But if you own AT&T, you're losing Warner Brothers, so you have to gain something. So you're gaining Warner Brothers Discovery stock. But that was the first time I've heard of it in this when AT&T divested them. So that was interesting. And the whole point of it is so they can do it tax-free. But if you want to sell one of your business units, you can't do a reverse Morris trust because the point of the reverse Morris trust is you have to own half of it, the new company, afterwards. And usually when you want to sell something, you don't want to own it still. You just want to get rid of it. GTX. They're in Switzerland. So they make turbochargers for ICE cars. Oh, they were a Honeywell. So it looks like Honeywell spun off Garrett Motion into its own company. It's an American company involved in engineering, manufacturing turbochargers, and related forced induction systems for the ground vehicles. So in 2018, Garrett Motion became an independent, publicly traded company through distribution of Garrett shares to Honeywell stockholders. Each Honeywell stockholder received 1 share for every 10 shares they own. So he became I guess they were acquired by Honeywell. Okay, it was acquired by Lycoming, and then in '99, that company merged with Honeywell. So it became an independent, publicly traded company in 2018. Then they filed bankruptcy 2 years later, and they were acquired by KPS Partners. And then in April 2021, they emerged from bankruptcy, completing the restructuring process, implementing a restructuring plan that was confirmed by U.S. bankruptcy. The company raised $1.3 billion in Chapter 11 restructuring. So they do come with a little baggage. So you want to consider that. It's kind of like if you meet a girl, right, and everything seems great, but you find out she has a kid. It's not like it's the end of the relationship, but there's a little baggage there. There's a little residual stuff going on. You have to deal with now, not only her kid, but the father of the kid, and so a little baggage with the company. The fact that they were in bankruptcy, they emerged from bankruptcy. So they have that's something they have to deal with. They may have some underlying debts or obligations. What stock do you like better, Visa or Amex? I don't know. I guess Amex, but I have to look at it. I'm not sure. So sales are down from 1 billion to 890 million. That's not good. Why are they down so much? That's like 10%. See, this is like the residuals I'm talking about. Like this might have been part of the bankruptcy process. These preferred stock dividends. They had a big net loss last year. They doubled their shares outstanding. It went from 107 million to 224 million. So they're not in the best financial shape. They have negative equity. $1.5 billion of long-term debt. Pretty high interest rate, 7.75% on a lot of that debt. I mean, I wouldn't touch it. I just think it's like I said, it's just too much baggage, like a kind of like a black cloud hanging over the company. It's kind of like if you start a new company, you don't really have any. You don't have to deal with like anything from the past. But in that case, they've already proven they can't make money on their own, so they needed the bankruptcy process to clean off the debt. I could see definitely risky. It's not like like buying Starbucks stock or something like that. But I wonder why revenue is down over 10%. It looks like it's down in every category. Let's see. So they just added $800 million senior note. I mean, it's definitely not a long-term investment. The thing is, with something like this, you can like triple your money in a few months, but if you time it really well. So it started trading again in 2018. So it's pretty much gone down since then. But if you like I said, if you timed it well, it got real low because I think they thought they're going to go bankrupt again. Well, they did go bankrupt. What year did they go bankrupt? They emerged in 2018. They filed 2020. They filed in 2021. No, they on 20. Right after COVID, they filed. September 2020. So they got pretty low, $2. Stock hit its all-time low, but that would have been the best time to buy it. Although it's kind of risky investing in a stock that declares bankruptcy. Yeah, small caps. I don't know. I don't really. I mean, if you want to throw out a small cap, we could look at it, but I can't think of ones I looked at It seems like when I put money to a small cap, I usually lose. What? Yeah, I can't think of many small caps that I actually made a good return on, at least lately. New Bank's not small, but I got it. It's come down a lot. It's down like 30% the past. It's 50 billion. That's not a small cap, I guess. Okay. Well, yeah. So me and Victor are going to do a video tomorrow. I think at noon tomorrow. Yeah, at noon.